All right, so let's dive into this Nasdaq correction. You sent over this Motley Fool article, and
Yeah.
it's from just last week, and it's clear you're wanting to understand what this market shakeup means, for you and your investments.
Yeah, definitely. The Nasdaq, as you know, is known for its tech companies,
Hmm.
and it's recently experienced a pretty significant dip,
Yeah.
a 10% drop to be precise,
Oh, wow.
which officially puts it into what market analysts call a correction.
Yeah. Now, a 10% drop, that might sound kind of alarming to some folks out there.
Right.
But I'm curious, like, what were the specific factors that contributed to this correction? The Motley Fool article kind of points to some economic anxieties.
Yeah.
Like, what are your thoughts on that?
Yeah, well, the article highlights weaker than expected jobs reports
Oh,
and a dip in consumer confidence,
okay.
as you know, potential triggers.
Yeah.
And these are the kinds of economic indicators that can sometimes spook investors and make them sort of reevaluate their positions a little bit.
Right. Yeah, it's like a ripple effect.
Exactly.
And speaking of ripples, remember those tariffs that President Trump introduced
Yes.
on imports from Mexico, Canada, and China?
Hmm.
I'm wondering how those played into this, market uncertainty.
Right. Well, those trade tensions definitely added to the uncertainty.
Yeah.
Things like tariffs often inject volatility into the market
Hmm.
as businesses kind of grapple with how it will impact their supply chains and their
Yeah.
costs.
Right.
And even though some of those tariffs were delayed, the uncertainty surrounding, when and how they would be implemented definitely played a role
Okay.
in investor sentiment.
So it was this combination of economic jitters and trade tensions that kind of spooked the market.
It seems that way. Yeah.
Yeah. Now, the big question on everyone's mind is, what does a correction really mean?
Yeah.
Is this a sign of like an impending crash, or is it something else entirely?
That's a great question. And that's where understanding market history can be really helpful. A correction, by definition, is a 10% decline
Okay.
from a recent peak in a market index.
Mm-hmm.
It's important to distinguish that from a bear market,
Right.
which is a 20% drop and often reflects a much deeper, more prolonged downturn.
Okay. So a correction is like a speed bump, and a bear market's more like a roadblock.
I like that analogy, yeah.
Yeah.
And what's interesting is that historically, corrections in the Nasdaq,
Mm-hmm.
particularly in the tech-heavy sector,
Right.
have often been followed by a period of positive performance.
Really?
In fact, data shows that the average gain in the 12 months following a Nasdaq correction is over 21%.
Wow. That's a pretty significant rebound.
It is.
But I'm guessing we shouldn't just blindly assume that history will repeat itself, right?
Right, of course not.
Yeah.
There are always other factors at play.
Okay, so how should we be interpreting this correction then?
Right.
The Motley Fool article seemed to suggest that it might actually be a buying opportunity, a chance to snag some bargains.
Mm.
What are your thoughts on that?
Yeah, I think that's definitely a perspective worth exploring.
Okay.
Remember how high valuations we're getting for some of those big tech giants?
Oh, yeah.
Well, this correction has kind of brought things down to a more reasonable level.
Okay.
For example, NVIDIA's price-to-earnings ratio,
Mm-hmm.
a key metric for valuing companies,
Yeah.
has dropped significantly.
Okay.
And so has Amazon's.
So if I'm understanding this correctly, you're saying that this correction might actually present an opportunity to buy into companies with strong fundamentals
Yeah.
at a more attractive price.
That's exactly right.
Okay, but it's crucial to remember that not every dip is a buying opportunity.
Right. Oh, for sure.
Yeah.
While a correction can create opportunities,
Mm-hmm.
it's essential to really focus on the long-term prospects
Yeah.
of the companies that you were considering.
Okay, so how do we avoid making impulsive decisions in a market downturn? I mean, it's easy to get caught up in the fear and the panic, right?
It absolutely is. And one key principle to keep in mind is the concept of intrinsic value.
Okay.
And that refers to the actual worth of a company based on its underlying assets,
Mm-hmm.
its earning potential, and its long-term growth prospects.
Okay.
So it's about looking beyond those short-term market fluctuations and assessing whether a company's current price
Right.
really reflects its true value.
So it's about separating the noise from the signal,
Exactly.
focusing on the fundamentals rather than getting swept up in the emotional roller coaster of the market.
That's a great way to put it.
Yeah.
Yeah, and that's really where thorough research becomes so indispensable.
Okay.
Let's take NVIDIA as an example.
Mm-hmm.
While its price-to-earnings ratio has come down, we need to delve deeper.
Right.
What's driving their revenue growth?
Yeah.
Are they innovating in key areas? How strong is their competitive position?
Right.
These are all the questions we need to be asking ourselves.
So it's not just about buying something because it's cheaper.
Right.
It's about understanding the underlying business and its potential for future growth.
Exactly. You got it.
Okay.
And that requires us to think like business analysts, not just stock traders.
Right.
We need to understand a company's strategy,
Okay.
its management team, its competitive landscape,
Right.
and its ability to adapt to changing market conditions.
That makes a lot of sense.
Yeah.
It's like the difference between buying a house just because it's on sale versus like carefully inspecting the foundation and the roof and all the other essential elements before you make a decision.
That's a great analogy.
Yeah.
And it really highlights the importance of having a well-defined investment strategy.
Okay.
So, are you a growth investor looking for companies with high potential but also higher risk? Or are you a value investor seeking undervalued companies with solid fundamentals?
Right.
Your strategy should really guide your decision-making during a correction.
Okay, so we've talked about the importance of research and having a strategy.
Right.
But I'm still a little wary of this whole buy the dip mantra. How do we avoid falling into the trap of catching a falling knife, as they say?
Right.
How do we know when a dip is a genuine opportunity versus a sign of further decline?
That's a valid concern.
Yeah.
And that's where the concept of risk management comes into play.
Okay.
Diversification is key. Don't put all your eggs in one basket.
Right.
Instead, spread your investments across different asset classes,
Okay.
different sectors, and even geographic regions.
So even if one sector or company is struggling, the others can help cushion the blow.
Exactly.
Okay.
And another aspect of risk management is setting appropriate position sizes. Don't invest more than you can afford to lose in any single stock or asset class.
Okay.
Determine your risk tolerance and invest accordingly.
So it's about being strategic and calculated, not just emotional and impulsive.
Precisely. And it's also about understanding that market corrections are a natural part of the economic cycle.
Yeah.
They can be unsettling, but they also present opportunities for those who are prepared and informed.
That's a reassuring perspective. It's easy to get caught up in the doom and gloom headlines. But knowing that corrections are a normal part of the market's ebb and flow, it helps me feel more grounded.
Exactly.
Yeah?
And remember, the Nasdaq has a remarkable history of bouncing back from corrections and reaching new heights. Look at its performance since 2000. All those dips now look like minor blips.
Really?
On the long-term chart.
So we shouldn't let short-term market fluctuations derail our long-term investment goals?
Yep.
It's about staying the course.
Exactly.
Right.
It's about focusing on your investment horizon and maintaining a disciplined approach. If your goals in your time horizon haven't changed, then a correction shouldn't fundamentally alter your strategy.
Right. Okay, so we've covered a lot of ground here.
We have.
Understanding the nature of corrections, the importance of research, the need for risk management, and the historical resilience of the Nasdaq. But I'm still wondering, how do we apply all this wisdom to our own portfolios? How do we go from theory to practice?
Yeah, this has been incredibly helpful, in understanding not just what a correction is, but, how I should be thinking about it as an investor. Yes, the Motley Fool's right. This might actually be a time to reevaluate my portfolio.
Yeah.
And see if it still aligns with my long-term goals.
That's exactly the right mindset to have.
Yep.
This correction can serve as a catalyst for you to reassess your holdings and make sure that they still reflect your investment philosophy and your risk tolerance.
So it's like a checkup for my portfolio.
Exactly.
Making sure everything is still healthy and aligned with my overall financial plan.
That's right.
Okay. And as part of that checkup, ask yourself, are there any companies you've had your eye on? Companies with solid fundamentals and strong growth prospects that were perhaps a bit too pricey before? Well, this dip might present an opportunity to acquire them at a more favorable valuation.
Okay, that makes sense. But how do I go beyond just looking at a lower price tag? How can I tell if a company's truly poised for long-term growth, even in a turbulent market like this?
That's the million-dollar question, isn't it?
Yeah.
And it requires us to go beyond just looking at the surface-level metrics.
Okay.
We need to understand the forces that are shaping the future.
Mm-hmm.
The technological advancements, the demographic shifts, the evolving consumer behaviors.
Right.
And we need to identify companies that are well-positioned to capitalize on these trends.
So it's about looking for companies that aren't just riding the wave, but are actually shaping the wave itself?
Exactly.
The innovators, the disruptors, the ones who are creating the future.
That's it. For example, if you believe in the transformative potential of artificial intelligence, you might look for companies that are developing cutting-edge AI technologies or applying AI in innovative ways across different industries.
Right.
Or if you see a growing demand for sustainable solutions, you might focus on companies leading the charge in renewable energy electric vehicles or circular economy models.
It's about understanding the macro trends and then zooming in on the companies that are playing a key role in shaping those trends.
Exactly.
It's like investing in the architects of the future.
That's a powerful way to put it.
Yeah.
And it highlights the importance of continuous learning and staying informed about the forces that are shaping the world around us. Right. The more we understand the big picture, the better equipped we are to identify those companies that are building the future.
That's an incredibly insightful takeaway. It's not just about picking stocks. It's about understanding the grand narrative of innovation and progress and finding the companies that are writing the next chapter.
I like that.
Yeah.
And remember, this deep dive has provided you with a framework for navigating not just this correction, but any future market volatility that you may encounter.
Yeah.
The principles of research, risk management, and long-term thinking, these are timeless.
This has been incredibly eye-opening.
Good.
I feel much more confident and prepared to approach this correction or any future market swings with a level head and a strategic mindset.
That's great to hear.
Thanks for guiding me through this complex landscape.
It's been my pleasure.
Yeah.
Remember, knowledge is your most valuable asset, especially in the world of investing.
Right.
Stay curious, stay informed, and keep exploring.
And on that note, we'll wrap up this deep dive. I'm feeling much more empowered to not just weather the storm, but to potentially even find some hidden treasures amidst the market turbulence. Thanks again for joining us on this journey of financial discovery. So we've covered a lot of ground here.
Understanding the nature of corrections, the importance of research, the need for risk management, and the historical resilience of the Nasdaq. But I'm still wondering, how do we apply all this wisdom, to our own portfolios?
Yeah.
How do we go from theory to practice?
Well, that's a really important question. And as we've been discussing, this correction can be a good opportunity to take a closer look at your portfolio. Maybe see if there are any changes you want to make.
Yeah. Does this Motley Fool article suggest specific actions to take?
Yeah, they actually suggest that rather than panicking, investors should consider this correction as a chance to reevaluate their portfolios.
Okay.
Are there any companies that you've had your eye on that maybe were a little overpriced before?
Right.
Now might be a good time to snag them at a discount.
So it's almost like a sale at your favorite store.
Yeah. Okay, so that makes sense. But how do I know, if a company is really worth buying, how can I tell if a company is truly poised for long-term growth, even in a turbulent market?
Right. Well, that's where you have to go beyond just looking at the price. You need to look at the company's fundamentals, things like their earnings, their management team, their competitive landscape.
Okay. And
you want to ask yourself, is this a company that can weather the storm? Is this a company that's going to be around for the long haul?
So you're saying I need to think I'm kind of part owner of this company, not just someone looking to make a quick buck?
Exactly. You want to be an investor, not a speculator.
Okay, that makes a lot of sense.
And another thing to keep in mind is that the Nasdaq has a history of recovering from corrections.
Right. We talked about that earlier.
Yeah, and it's gone on to reach new heights. So this dip, while it might feel scary in the moment, is likely just a temporary setback.
So this is where that long-term thinking really comes in.
Exactly.
Not getting spooked by the short-term ups and downs.
That's right. The market is going to go up, the market is going to go down. But over the long term, if you invest in solid companies and you stay the course, you're likely to come out ahead.
Okay, that's really reassuring to hear. I was definitely feeling a little bit anxious about this correction, but now I'm feeling a lot more confident.
Good. That's what we want.
Yeah, this has been incredibly helpful just in understanding, not only what a correction is, but, how I should be thinking about it as an investor.
Glad I could help.
And honestly, this deep dive has been incredibly eye-opening.
Good.
I feel much more empowered now to not just weather this storm, but to potentially even find some hidden treasures amidst the market turbulence. So thanks again for, joining us on this journey of financial discovery.
You're very welcome. It was my pleasure.